Welcome back to Iraqi Dinar Intelligence. If you've been looking for a calm, evidence-based update on what's really happening inside Iraq's economy, you're in the right place. Today we're putting the rumors aside and focusing on the developments that can actually be verified. Every week, social media fills up with claims about secret meetings, hidden documents, and predictions of an overnight Iraqi dinar revaluation. While those stories often attract attention, they rarely come with credible evidence. The more reliable way to understand Iraq's financial direction is to follow official policies, institutional reforms, and measurable economic developments. This week, three important developments deserve attention because together they provide a clearer picture of where Iraq's financial system appears to be heading. The first is the Central Bank of Iraq's continued effort to encourage greater use of the Iraqi dinar while reducing dependence on physical US dollars. The second is the ongoing expansion of digital customs systems at Iraq's border crossings, designed to improve transparency and strengthen financial oversight. The third is renewed activity in Iraq's energy sector, where major international companies continue making long-term business commitments. None of these developments represents an official announcement of an Iraqi dinar revaluation or a change to the country's official exchange rate. As of today, neither the Iraqi government nor the Central Bank of Iraq has announced any official RV or adjustment to the official exchange rate. Instead, these developments are important because they reveal the direction of Iraq's broader economic reforms. That distinction matters. Institutional reforms rarely happen overnight. They usually unfold through a series of connected policy decisions that gradually strengthen the country's financial framework. While individual headlines may appear unrelated, together they can reveal a larger strategy. So the key question is simple. Is Iraq continuing to modernize its financial system and strengthen the institutions that support its economy? Based on the developments reported this week, there are clear signs that those reform efforts are continuing. Let's begin with the Central Bank of Iraq and its ongoing campaign to reduce reliance on the US dollar within the domestic economy. For many years, the US dollar has played a major role in Iraq's everyday financial life. Many businesses preferred to conduct transactions in dollars. Families often saved their wealth in dollars, and cash dollars became widely used because people viewed them as stable and convenient. While this practice developed for understandable reasons, it also created long-term challenges for Iraq's monetary authorities. When a large share of economic activity takes place outside the national currency, it becomes more difficult for a central bank to guide monetary policy effectively. It also encourages parallel market activity and limits the role of the formal banking system. This is why the Central Bank of Iraq has continued introducing policies that encourage greater use of official banking services and dinar-linked financial products while reducing unnecessary dependence on physical US dollars. These measures are sometimes misunderstood. Some observers assume that any restriction involving dollars automatically signals a shortage of foreign currency reserves or financial distress. However, that is not necessarily the case. If a country has weak reserves, tighter dollar controls could indeed reflect economic pressure. But Iraq's foreign exchange reserves have generally remained substantial in recent years, allowing analysts to interpret these policies differently. Rather than indicating that Iraq is running out of dollars, these reforms appear designed to improve oversight of how foreign currency moves through the economy. That represents a significant difference. The central bank's objective is not simply to limit access to dollars. Instead, it seeks to encourage more financial activity to pass through licensed banks and regulated payment systems. When transactions occur inside the banking sector, they create transparent records that regulators can monitor. Those records help authorities understand economic activity, improve compliance, reduce financial crime, and strengthen confidence in the financial system. Cash transactions moving through informal markets provide far less visibility. For that reason, encouraging bank-issued payment cards and formal financial instruments is about much more than convenience for travelers. It reflects a broader effort to modernize Iraq's banking infrastructure. As more people rely on regulated financial services instead of physical cash, the banking system gains more reliable data, greater transparency, and stronger oversight capabilities. Over time, this can reduce reliance on informal currency markets while strengthening confidence in official financial channels. That process does not happen overnight. Changing financial habits takes time because people naturally continue using the methods they have trusted for years. However, successful monetary reforms are often built through gradual behavioral change rather than dramatic announcements. Each new policy encouraging greater participation in the formal banking system adds another layer to that long-term strategy. Viewed individually, these adjustments may seem relatively small. Viewed together, however, they suggest a consistent direction. The Central Bank of Iraq appears focused on building a more transparent, more accountable, and more digitally connected financial system. For long-term observers, that consistency is often more meaningful than short-term speculation. Instead of focusing on unverified rumors, serious analysts watch whether institutions continue implementing reforms that strengthen the country's financial foundation. That brings us to the second major development this week: Iraq's continued expansion of digital customs management across its border crossings. Although customs modernization rarely generates exciting headlines, it is one of the most important structural reforms taking place inside the country. A modern customs system does far more than collect taxes. It records imports and exports more accurately, improves government oversight, reduces opportunities for fraud, strengthens trade transparency, and supports efforts to combat money laundering and illicit financial activity. Historically, paper-based customs procedures have allowed opportunities for underreporting shipment values, manipulating invoices, or moving goods through less transparent channels. Those weaknesses reduce government revenue while making financial oversight far more difficult. Digital customs systems are designed to address those problems. Every shipment creates electronic records that can be reviewed, verified, and compared with other financial information. This creates stronger audit trails and makes it much harder to conceal discrepancies between declared values and actual transactions. As Iraq expands these digital systems across additional border crossings, it is gradually improving transparency throughout its trade network. That matters because trade and finance are closely connected. When imports and exports are properly documented, regulators gain a clearer understanding of how money moves throughout the economy. This strengthens financial integrity while supporting broader economic reforms. Again, none of this should be interpreted as evidence of an imminent exchange rate change. Rather, these are examples of institutional improvements that help build a stronger financial system over time. And as we continue this analysis, we'll look at how these reforms connect with developments in Iraq's energy sector and why international investment decisions may provide another useful indicator of the country's long-term economic direction. Now, let's take a closer look at why customs modernization deserves far more attention than it usually receives. At first glance, a digital customs system may sound like nothing more than a technological upgrade. In reality, it is one of the most important building blocks of a modern economy. Whenever goods enter or leave a country, customs authorities are responsible for recording what is being traded, confirming its declared value, collecting the appropriate duties, and ensuring that shipments comply with national regulations. When those processes rely on outdated paperwork or inconsistent reporting, opportunities arise for underreporting imports, manipulating invoices, avoiding taxes, and moving money through unofficial channels. That creates problems well beyond border crossings. Every shipment carries financial information. If trade records are inaccurate, then financial reporting also becomes less reliable. Governments lose revenue, regulators lose visibility, and businesses operating honestly face an uneven playing field. This is why Iraq has continued expanding digital customs management across additional border crossings. Instead of depending primarily on paper documents, electronic systems create permanent records that can be reviewed, verified, and compared with other government databases. They allow authorities to identify unusual trading patterns, improve compliance, and strengthen oversight of cross-border commerce. While this may not generate dramatic headlines, these kinds of reforms often produce lasting benefits. Greater transparency means stronger financial management. Stronger financial management improves confidence in public institutions. And stronger institutions create a more stable environment for both domestic businesses and international investors. There is another important reason these reforms matter. Trade and banking are closely connected. When customs records accurately reflect the true value of imported and exported goods, financial institutions can better monitor payments associated with those transactions. This improves efforts to combat money laundering, trade-based financial crimes, and other forms of illicit financial activity. For international banks and foreign investors, these improvements are significant. Large financial institutions prefer working with countries that demonstrate clear regulatory standards, reliable documentation, and transparent financial controls. Strong compliance systems reduce uncertainty and make international business relationships easier to manage. That is why expanding digital customs should not be viewed simply as an information technology project. It is part of a broader effort to strengthen Iraq's financial infrastructure. As additional border crossings adopt standardized electronic procedures, opportunities for inconsistent reporting become more limited, while accountability increases across the system. The benefits also extend to government finances. Customs duties represent an important source of non-oil revenue for Iraq. When imports are accurately declared and appropriate duties are collected, the government receives funds that can support infrastructure projects, education, healthcare, and other public services. Reducing revenue leakage strengthens fiscal planning and allows policymakers to manage public resources more effectively. In other words, better customs management supports stronger public finances. And stronger public finances can contribute to greater economic stability over time. Another important aspect involves institutional credibility. Countries seeking greater international investment must demonstrate that their regulatory systems are becoming more transparent and predictable. Businesses making long-term investments want confidence that rules are applied consistently and that commercial activity takes place within a stable legal framework. Digital customs systems help support that objective by reducing uncertainty and creating standardized procedures. Although these reforms cannot solve every economic challenge overnight, they represent practical improvements that strengthen the overall business environment. This brings us to the third major development attracting attention this week, the energy sector. Oil continues to play a central role in Iraq's economy, providing a substantial share of government revenue and foreign currency earnings. Because of that, developments affecting Iraq's oil industry often attract considerable interest from investors. One topic discussed this week involves pricing differences between Basra crude and international benchmark prices. At first glance, seeing Basra heavy trading differently from benchmarks such as Brent can lead some observers to assume that something unusual is happening. However, oil pricing is rarely that simple. Different grades of crude oil have different physical characteristics. Basra heavy contains higher sulfur content and is heavier than many benchmark crude grades. Because processing this type of oil requires specialized refining capabilities, it commonly trades at a discount compared with lighter crude oils. That pricing difference is a normal feature of the global oil market rather than automatic evidence of economic weakness. Oil prices are influenced by many factors, including refinery demand, transportation costs, regional supply conditions, official selling price formulas, and the quality of each crude grade. For that reason, analysts generally avoid drawing broad conclusions from a single pricing movement. Instead, they examine whether Iraq continues exporting oil successfully, maintaining production, and attracting long-term commercial partnerships. Those broader indicators often provide a more meaningful picture of the country's energy sector than daily price fluctuations alone. Another important development this week is the continued participation of major international companies in Iraq's oil industry. When global energy firms commit to multi-year operational agreements, they invest significant financial resources, personnel, technology, and equipment. Such decisions are typically based on extensive due diligence. Companies evaluate legal protections, operational risks, infrastructure, commercial opportunities, and long-term business conditions before making those commitments. Because of that, long-term investment agreements often indicate that companies believe the operating environment is sufficiently stable to support their activities. That does not mean every challenge has been resolved, nor does it guarantee future economic outcomes. However, it does suggest that experienced international firms see enough opportunity to justify continued involvement in Iraq's energy sector. This matters because foreign investment brings more than capital. It also introduces technical expertise, operational experience, advanced technologies, and international business relationships that can support economic development over time. Viewed alongside ongoing banking reforms and customs modernization, these investment decisions contribute to a broader picture of institutional development. Rather than focusing on isolated headlines, it is more useful to observe how multiple sectors are progressing simultaneously. Banking reforms, digital customs modernization, and continued international investment all point toward efforts to strengthen Iraq's economic framework. It is important to emphasize once again that these developments should not be interpreted as confirmation of any imminent Iraqi dinar revaluation or official exchange rate adjustment. As of now, no official announcement has been made by the Iraqi government or the Central Bank of Iraq regarding any change to the official exchange rate. Instead, these developments highlight the gradual process of institutional reform, a process that often unfolds over years rather than days. For long-term observers, the value lies not in predicting exact dates, but in recognizing whether the underlying direction remains consistent. Based on this week's developments, that broader direction continues to focus on improving transparency, strengthening financial oversight, encouraging formal economic activity, and attracting responsible long-term investment. Now, let's connect these developments and look at the bigger picture. When banking reforms, customs modernization, and foreign investment all move in the same general direction, they tell us more than any single headline ever could. None of these developments should be viewed in isolation because each one supports the others. A stronger banking system encourages more transactions to flow through regulated financial institutions. A stronger customs system improves oversight of international trade and reduces opportunities for illicit financial activity. At the same time, continued investment in Iraq's energy sector supports government revenues and demonstrates confidence from experienced international companies. Together, these developments point toward a gradual strengthening of Iraq's institutional framework. That does not mean every challenge has been solved. Iraq still faces economic, political, and administrative obstacles that require continued reform. Progress is rarely linear, and major structural changes often take years to fully develop. However, when evaluating long-term trends, consistency matters more than speed. Many people following the Iraqi dinar focus on finding one dramatic announcement that instantly changes everything. In reality, institutional reform usually works very differently. Countries strengthen their financial systems through hundreds of individual policy decisions that gradually improve transparency, accountability, and efficiency. Those changes rarely produce overnight results. Instead, they build the foundation that supports future economic stability. This week's developments appear to fit that pattern. The central bank continues encouraging greater use of formal banking channels. Digital customs systems continue expanding across border crossings. International companies continue making long-term operational commitments within Iraq's energy sector. Each development supports a broader objective of creating a more organized and transparent economy. An important part of this process is reducing the size of the informal economy. Informal markets exist in many countries, but when too much financial activity occurs outside regulated institutions, governments have less visibility into how money moves throughout the economy. That makes it more difficult to enforce regulations, collect revenue, monitor financial risks, and implement effective monetary policy. This is one reason policymakers place significant emphasis on bringing more activity into the formal financial system. When businesses use licensed banks, when trade is accurately documented, and when payments move through regulated channels, authorities gain better information for economic planning. That increased transparency benefits both regulators and legitimate businesses. It also supports international compliance standards that many global financial institutions expect. For foreign banks and multinational companies, transparency is an important consideration. International business depends heavily on reliable financial records, clear regulatory procedures, and confidence that commercial transactions can be verified. Countries demonstrating improvements in these areas often become more attractive destinations for investment. That does not guarantee increased investment by itself, but it creates conditions that encourage greater commercial participation over time. Another factor worth considering is Iraq's ongoing effort to strengthen its relationship with the international financial community. Modern banking requires cooperation with foreign financial institutions, correspondent banks, payment networks, and regulatory organizations. These relationships depend heavily on trust. The stronger a country's compliance systems become, the easier it is to develop those international financial connections. Digital customs management contributes to that effort by improving documentation and creating more complete audit trails for cross-border trade. Likewise, banking reforms that increase transparency help demonstrate commitment to internationally recognized financial standards. These improvements may not attract widespread public attention, but they are closely watched by financial professionals and institutional investors. The same principle applies to long-term commercial agreements within Iraq's energy sector. Large international companies invest considerable time and resources before entering multi-year contracts. Their decision-making process typically includes legal reviews, financial analysis, operational planning, security assessments, and commercial forecasting. Because of that, their continued participation can serve as one indicator that they believe Iraq offers viable long-term business opportunities. It is important to avoid overstating what these agreements mean. A commercial investment does not guarantee future currency appreciation, nor does it predict changes in exchange rate policy. However, sustained investment activity can reflect growing confidence in Iraq's broader economic environment. Viewed together, these developments suggest that Iraq continues working toward greater institutional stability. Again, that should not be confused with predictions of an immediate Iraqi dinar revaluation. As of this analysis, there has been no official announcement from the Iraqi government or the Central Bank of Iraq regarding any revaluation or change to the official exchange rate. That fact remains important. Responsible analysis should always distinguish between verified institutional developments and speculation circulating online. One of the biggest mistakes investors make is allowing rumors to outweigh documented policy actions. Rumors often create excitement, but they frequently disappear without producing measurable results. Institutional reforms, on the other hand, may receive less attention, yet they often have far greater long-term significance. This is why experienced observers focus on implementation rather than speculation. They ask whether new systems are actually being introduced. They watch whether reforms continue over time. They evaluate whether government institutions are becoming more transparent and effective. Those questions provide a stronger basis for understanding long-term economic direction than unverified claims shared on social media. From that perspective, this week's developments present a relatively consistent picture. The reforms appear gradual rather than dramatic. They appear institutional rather than political. And they suggest continued efforts to strengthen Iraq's financial infrastructure through practical, measurable improvements. That doesn't provide a timeline for future exchange rate decisions. Instead, it provides context for understanding how economic modernization typically unfolds. Strong currencies are generally supported by credible institutions, transparent financial systems, effective regulation, sustainable public finances, and investor confidence. Those foundations are built step by step. While the pace may sometimes seem slow, each completed reform adds another piece to the overall framework. That is why long-term observers often pay closer attention to institutional progress than short-term market speculation. Because in the end, sustainable economic change is usually built through consistent reforms, not dramatic headlines. As we bring all of these developments together, one conclusion becomes increasingly clear. Iraq's current reform efforts are not centered on a single policy or one headline-making announcement. Instead, they involve multiple institutions working toward the broader objective of creating a stronger, more transparent, and better regulated economy. The Central Bank of Iraq continues encouraging greater use of formal banking channels. Government agencies continue expanding digital systems that improve customs oversight and strengthen trade transparency. Meanwhile, international energy companies continue maintaining long-term involvement in Iraq's oil sector, reflecting ongoing commercial interest in the country's future. When viewed individually, each development may seem relatively modest. However, when examined together, they present a more meaningful picture of gradual institutional progress. This is an important distinction because many discussions surrounding the Iraqi dinar focus almost entirely on rumors or predictions about a single future event. Real economic reform rarely follows that pattern. Successful economies are built through stronger institutions, improved governance, better financial oversight, and consistent implementation of policy over many years. Those foundations are rarely exciting, but they are essential. One question often asked by viewers is why these structural reforms matter if there has been no official change to Iraq's exchange rate policy. The answer is straightforward. A country's currency reflects confidence in the broader economic system that supports it. That confidence depends on numerous factors, including financial transparency, fiscal discipline, effective banking supervision, investor confidence, trade efficiency, and institutional credibility. When those areas improve, they strengthen the overall economic environment. That does not automatically lead to an immediate change in exchange rate policy, but it creates conditions that may provide policymakers with greater flexibility over the long term. It is also important to understand that economic modernization is rarely a straight line. Periods of progress may be followed by temporary delays. Some reforms move quickly, while others require years of planning, legislation, infrastructure development, and administrative implementation. This pattern is common around the world. For that reason, long-term observers generally evaluate trends over months and years rather than reacting to daily speculation. Another lesson from this week's developments is the importance of focusing on evidence instead of assumptions. Verified policy actions provide far more valuable information than anonymous online claims. Official reforms can be examined, measured, and tracked over time. Rumors usually cannot. Whenever new information appears, it is worth asking a simple question. Does this information come from an official institution, or is it simply another unverified claim circulating online? That question alone helps separate meaningful developments from speculation. Throughout this week's analysis, the focus has remained on measurable institutional activity rather than unsupported predictions. The continued modernization of banking services, expansion of digital customs management, and ongoing international investment all represent observable developments. Whether these reforms eventually produce broader economic benefits will depend on how consistently they are implemented in the years ahead. That remains the key issue. No single reform transforms an economy overnight. Instead, progress usually results from many complementary improvements working together. Financial transparency supports investor confidence. Better customs oversight strengthens government revenue collection. A healthier banking system improves monetary management. Foreign investment contributes capital, technology, and commercial expertise. Combined, these factors reinforce one another and gradually strengthen the country's economic foundation. It is equally important to recognize what these developments do not mean. They should not be interpreted as confirmation of an imminent Iraqi dinar revaluation or any official adjustment to the exchange rate. As of today, no official announcement has been made by the Iraqi government or the Central Bank of Iraq regarding any change to the official value of the Iraqi dinar. Responsible reporting should always make that distinction clear. The purpose of examining these reforms is to understand Iraq's long-term economic direction, not to predict events that have not been officially announced. That approach helps viewers make more informed decisions while avoiding unnecessary speculation. Looking ahead, the most valuable indicators will continue to be official policy announcements, measurable institutional reforms, economic performance data, banking modernization efforts, foreign investment activity, and developments affecting Iraq's broader business environment. These are the areas that deserve continued attention because they provide insight into how the country's financial system is evolving. As new information becomes available, the objective should always remain the same: evaluate verified facts, separate evidence from speculation, and understand the broader economic context behind each development. That perspective provides a much stronger foundation for analyzing Iraq's financial future than relying on rumors alone. As we conclude today's analysis, it's worth stepping back and looking at the broader picture one final time. This week's developments were not driven by sensational headlines or dramatic announcements. Instead, they reflected something far more important: continued institutional reform. The Central Bank of Iraq is still encouraging greater participation in the formal banking system while reducing unnecessary reliance on physical U.S. dollars. Digital customs systems continue expanding across border crossings, improving transparency, strengthening oversight, and helping modernize Iraq's trade infrastructure. At the same time, international companies remain engaged in Iraq's energy sector through long-term investments that reflect confidence in the country's commercial potential. Each of these developments represents progress within its own area. Together, they suggest that Iraq continues working toward a more structured, transparent, and efficient economic system. That broader direction is what deserves attention. At the same time, it is equally important to remain realistic. As of today, there has been no official announcement from the Iraqi government or the Central Bank of Iraq confirming an Iraqi dinar revaluation or a denomination, or any change to the official exchange rate. Any claims suggesting that such an event has already been approved or secretly implemented should be treated with caution unless they are supported by official government or central bank statements. Responsible analysis requires distinguishing between verified information and speculation. That principle is especially important in discussions surrounding the Iraqi dinar, where rumors often spread much faster than confirmed facts. The strongest approach for long-term observers is to monitor what institutions are actually doing, not simply what anonymous online sources claim. Official reforms, policy updates, banking initiatives, customs modernization, foreign investment, budget implementation, and economic legislation all provide measurable evidence of Iraq's ongoing development. Those are the indicators that deserve continued attention. While no single reform guarantees future outcomes, consistent institutional improvements can strengthen the country's financial foundation over time. Economic modernization is rarely built through one historic announcement. It is built through hundreds of practical decisions that gradually improve governance, financial transparency, regulatory oversight, investment conditions, and public confidence. That process may sometimes appear slow, but history shows that lasting reforms usually follow exactly this kind of path. For investors and long-term observers, patience and careful analysis remain essential. Instead of reacting to every rumor, it is often more valuable to ask whether Iraq's institutions continue moving toward greater stability, transparency, and modernization. Based on the developments reviewed today, that broader reform process appears to be continuing. Of course, challenges still remain. Economic diversification, infrastructure development, banking modernization, public sector reform, and private sector growth will all require sustained effort in the years ahead. No country completes structural reform overnight. However, continued progress across multiple sectors is generally a more meaningful indicator than any isolated headline. That is why following official institutions remains so important. Government ministries, the Central Bank of Iraq, Parliament, international financial organizations, and verified economic reports provide a much stronger basis for understanding Iraq's direction than speculation found on social media. Our goal on this channel is to continue separating facts from rumors and helping you understand the bigger economic picture using credible information and balanced analysis. Whenever significant policy changes, banking reforms, investment developments, or official economic announcements take place, we'll break them down in plain English so you can understand what they mean, and just as importantly, what they do not mean. Thank you for spending your time with us today. If you found this analysis useful, consider subscribing to Iraqi Dinar Intelligence so you don't miss future updates on Iraq's economy, the Iraqi dinar, banking reforms, oil developments, and other verified financial news. If you enjoyed today's discussion, leave a like and share your thoughts in the comments below. We'd love to hear your perspective, and respectful discussion helps everyone better understand these complex economic developments. Until next time, stay informed, stay patient, verify your sources, and remember that the strongest investment decisions are usually based on facts, not speculation. Thank you for watching, and we'll see you in the next update.